Welcome to Fin Street. Today we are focusing on CV finances and how they are seeing business growth after the pandemic. We have with us Krishnan ASV, who is the Senior Vice President, Lead BFSI at HDFC Securities. Krishnan, welcome to the show. Let me begin asking you, since we are talking about CV and CV finances, where do you think we are in the CV cycle, both for passenger as well as commercial vehicle segment?
Many thanks for having me on the show, Abhishek. I think we are looking at a very strong demand outlook reflected in passenger vehicles, manifested in very high waiting period for the passenger vehicles, and fairly strong freight rates for the CVs. So I think we're just at the cusp of an upcycle. There is obviously supply shortage, supply constrained market, but demand there seems to be no problem at all right now.
Also for the fact, we are seeing CV cycle benefit the CV financiers who are coming out of the worst of asset quality woes behind them, and we are seeing strong pickup in the disbursals over the last couple of quarters. What is your reading for CV finances going ahead?
So, as I just said, I think everything seems to be boiling down from a very strong demand outlook. So, whether it is to do with long haul, large cargo, or whether it is to do with what we are buying out in e-commerce, and hence what helps the short haul, the last mile to the consumer. So, whether it's closer to the market or closer to the consumer, I think the entire CV cycle is riding the demand tailwind, and hence to that extent disbursements are fairly strong, despite the fact that overall volumes are lower than where they were in 2019, purely in terms of where we are in the CV volumes. But from a tonnage perspective, I think we are not too far behind. So we might be 30% lower or 20% lower on overall CV volumes compared to a 2019 peak, but we may be only 5% behind on tonnage peak. So I think everything boils down to a very strong demand environment right now. That's what is helping all this. Yeah.
Well, to explain our viewers, tonnage that Krishnan is referring to is the amount of goods that is being carried per vehicle. So over there, he says that, there is a 5% decline in terms of tonnage volume carried by the CVs compared to today versus what it was in pre-pandemic levels. Now, Krishnan, other question is that, we are in a rising interest rate scenario, and CV financiers or their customers feel the pinch upfront, given the fact that interest rates are one of the most vulnerable position that fleet operators do take into account. What's your view this time around? Will they get impacted? Will there be a slowdown due to rising interest rate scenario, or will we see demand remaining robust going ahead as well?
So surprisingly, so far, I think, Abhishek, we believe that demand has actually held up very well. And it's been easy for fleet operators to pass on whatever cost increases they are seeing in terms of higher freight rates. We ourselves were a little surprised. We definitely have been doing our channel checks, and so far it has held up very well. Obviously, it remains to be seen. I mean, if interest rates go up another 200 basis points, then who knows? But I think right now there is enough absorption capacity with fleet operators. That's why we are extremely constructive. And all of this again boils down to a very strong demand environment. The day the demand environment softens, I think a lot of this actually falls off the cliff then. Yeah.
The other point that actually makes fleet operators vulnerable is the freight rate. So could you explain what is your outlook on the freight rate and how can that impact the demand?
So recently we put out a vehicle financing thematic where we articulated that freight rates have held up. We are constructive on freight rates as we speak from a medium term perspective. All of it riding on the demand tailwind that we see. And what this is helping us do is freight rates are currently helping these fleet operators make a free cash flow of roughly about 15 to 18%, which is considered very healthy at a pan India level, right? So just to put this number in perspective, I think somewhere during the pandemic, when there was absolutely no mobility, no travel happening, these numbers at a pan India, pan fleet operator level, this number would have been low single digit. Today we are at about 15 to 18% free cash flow pre-EMI. That means it's relatively simple for the fleet operators on average to pay off their EMI today, right? So the strong operators will continue to remain strong. There will always be a long tail, but the demand outlook today will help almost the entire sector navigate this period. Yeah.
You mentioned the word strong. So, Krishnan, what is the top pick in CV financing sector that you have? And could you also give a reason as to why you are bullish on that stock?
So our top preferences right now are Chola Finance and Sundaram Finance. Chola gives us the ability to ride both growth and profitability. Sundaram is a relatively lower growth, more linear, but extremely predictable and a strong franchise. So those two would be our top picks right now among the CV Finance.
Well, thank you so much for your views, Krishnan. CV is a reflection of how the economy is shaping up and GDP growth going ahead. This is the word coming in from Krishnan ASV of HDFC Securities, who is bullish on the CV finances due to the upcycle that you are seeing in the CV sector.